Inflation matters, and it matters to you. It matters in terms of your household. It matters in terms of your investments. It matters in terms of Tesla, because, of course, when you have high inflation, what do you get? You get high interest rates. So the inflation affects the company's ability to do what they need to do, because you have inflation rippling through the supply chain, and therefore it's hard to make decisions with regard to how to price your end product. And you also don't know when those things are going to reverse and come down. And so you end up with pricing issues on the opposite side as well. Obviously, again, with high interest rates, in the case of Tesla, we've seen what happened is the demand for, or the pricing has to come down in order to reflect the monthly cost of ownership. It's also true for housing, true for many other things. So this is Randy Kirk. If you like this kind of content, we're going to go off on a little tangent today. Hit like, hit subscribe, hit notifications, because I'm not sure when this is going to be up, but I assure you we have a slate of guests now who are regulars on this channel, and they are just going to be rotating and rotating and rotating. And whether you like the days that I'm by myself or not, you've got to like my guests. I mean, these people are amazing. So anyway, hit notify. And then, if you want to join Patreon and help support the channel, that's fantastic. And thank you for all of those who have continuously supported the channel for months now. All right, let's take a look. We're going to be talking about Trueflation today. Trueflation.com is a website that was put together by a group that wanted to do a much better job of being able to analyze inflation on a daily basis. So no matter which other kind of inflation approach you use, whether you're looking at the CPI, the PPI, which are both put out by the federal government, whether you're looking at the CPE, which also might be a government index, I can't remember right now, but that's one that the Fed loves because it looks at it from another perspective. Whichever perspective you're looking at it, you are always looking at old data. You're looking at data from, some of the data would be leading indicators that you're not seeing until the data is a month and a half old or 2 months old. They might be lagging indicators, and by the time you're seeing it, it's too late to do anything about it. So Trueflation set themselves up to not only give you daily information, but also to give you the information based on current ways of thinking about inflation, as opposed to some of the old ways that the government indexes are using. So I want to explain Trueflation to you today. You can, put it up on your computer if you want right now and take a look on your own computer, but I'll go through it and explain what they're doing. I highly recommend. This is not something you look at every day. This is something maybe you look at once a week, maybe you look at it every couple of weeks, or you look at it when the CPI is coming out to see a comparison, or to see how good this organization is predicting the future. It's always going to be telling you what probably is going to happen with inflation in a month or two. All right, so let's start with this page. So this is the way that Trueflation weights their different categories. I believe, although I didn't read it here, I believe that they're weighting the categories very similarly to the way the CPI and the PPI do. So you can see that food and non-alcoholic beverages is 15%, housing at 23%. Whoops, my face is in the way of this one. See if I get here. We get transportation at 20%. So those three between them represent 60% of the inflation, the cause of inflation. Now that makes sense. Your number one expense is usually housing. Your number two expense is usually transportation. And then food and non-alcoholic beverages would certainly be something that, well, it's probably not anywhere close to either one of those. So I'm not sure why it gets a 15.3% rating, because I think food and non-alcoholic beverages only represents about 4% of the average family's expenditures, but maybe I'm wrong on that. Okay. Let's take a look again, though. So now you get down and you notice that things like utilities is only 6%, alcohol and tobacco only less than 2%, education, why is it only 2.3%? Well, because the vast majority of households are not spending anything on education, and people that have kids in public school, it's very small. So the only time it's really costing a lot of money is if your kids are in private school or are in college and university. Looking at clothing and footwear, only 3.8% of the budget. Recreation and culture, 5.6. Communication, only 3.8. Household durables. And what you're going to find out, well, let's take a look. I'm not going to give you the advance on this. Let's go over and just look at the rest of what I want to show you today. So let's go to, I'm sorry, let me just back it up. That's maybe the easiest way to do it here. Okay. So the very front page, they show you today's CPI data by Trueflation, Consumer Price Index by Trueflation. The U.S. inflation rate by Trueflation is only 2.86%, and it's down over the last day. All right. So now let's take a look at a chart. You can see that back in July, down here, July of last year, we were running around 12%. That's pretty much what the government was telling us at that point. But now look what's happened since. It's dropped radically over this time period, suggesting that the Fed knows what it's doing. Well, I'm not sure that's exactly the reason. I would suggest my personal opinion is there was a whole lot of stuff going on in the supply chain that was way over, it was just way too high. And it was just a normal boom bust situation where the boom, the lack of supply, the humongous demand created outsized problems, which resulted in all these very rapid increases in price. That would have worked itself out anyway, but maybe not as quickly. If the Fed raising interest rates may have exacerbated, made it happen quicker. But here you can see the drop all the way down. They're showing right now to 2.86%. Where the Fed is still talking in terms of 6%. Now it was hitting around 6% on their chart. Here we go, 5.8. Let's go up to 5.9. That was back in January is when they were saying it was 5.9. So that would be 5 months off in their opinion. And now we're down into this 2.86 range in June. And it's been falling recently, jumped up just a teeny bit and then started to fall again. So now that's one of the cool things. So you can look daily if you want to, you can look weekly, look monthly, and you can see what they're saying compared to what the government's saying. And the government rate right now is 4.9. I'm sorry. So let's go back and do that again. Let's go back and look at when they were 4.9. That would have been in March. So that's a little more like what I'm talking about, where it's 2 months ahead of the Fed. So that may be something to look at. If that's true, if it's consistently two months ahead, then this 2.86 would suggest that by 1st of August, we should be down to that in the CPI. All right, so now let's go down. And what happens is now you get to look at it in terms of the categories. First of all, it'll tell you what it was yesterday, a week ago, last month versus last quarter. So you can see this precipitous drop. And what we have showing on this first one is housing. And so you can see housing is divided. Whoops, let's make sure I'm on the right one. Housing, you can see housing is now, they have it divided into total, owned dwellings, and rented dwellings. So the total, the dark blue line, is showing that it is now down to around 4% on housing on the total. Here you got 4% right over here. It shows that owned dwellings is down to a little over 4%. I would say closer to 5%, actually exactly 5%. But that the rental dwellings are down to only 0.68%. So getting very close to actually deflation on rental property. So that would be what the Fed would be looking for. I don't think the Fed really cares that much what's happening to owned property, although they do have this equivalent thing they talk about in terms of looking at owned property in terms of equivalent rents. I think that I'm hoping at least that the Fed doesn't pay that much attention to that particular statistic as much as they would be looking at real rents, which right now, and have been for a couple of months, very close to 1% on rented dwellings. Okay, you can also look at it over other different time periods. I'm looking at it over a year. You can look at year-to-date, 6 months, et cetera, if you want to see more detail. So let's go to the second one, transport. Okay, transport is divided into vehicle purchases and gasoline, fuels, and other. Well, we know that vehicle purchases hasn't been going down that much. but it's still down. So vehicle purchases were going up at a rate of close to 20%. And now it's down in the range of more like 10%. But the fuel and other expenses is down to negative. So we've actually got negative 21.16 on gasoline, other fuels, and motor oils. So that is, a fairly substantial number. We know we've seen this taking place with gasoline prices being down substantially compared to last year. All right, after that, we go to, I'm sorry, I missed the top one, which is food and beverages. Okay, that was the very first one they showed us. That one they divide into food and non-alcoholic beverages total, food at home versus food away from home. So food at home, I'm sorry, over here, the light one. So food at home has dropped dramatically and is all the way down to under. So it's at 9% deflation. I'm sorry, food away from home is deflating. I'm getting it backwards here. Food away from home is deflating, where food at home is still popping up at a very, very low rate, very close. And in fact, food and non-alcoholic beverages combined is actually also deflating. So the two out of the top three, transport and utility, transport and food and beverages are both deflating, and housing rentals are at 1%. So now you got the top three representing 60%. You can see why that they're showing that we're really already out of trouble here with regard to inflation. All right, we go from there to utilities, which is a fairly large thing, but again, big drop. Right now, it is only growing at about 6% per year, where it was growing, way up here in the 13, 14 and more. You go from there, let's look at health. Health expenses are way down from what was 6.2 per year at the top is now down to only 0.88% increase year over year compared to, year over year. So, and I expect, somebody called me on this on an earlier video, I expect healthcare costs to start going down quite substantially as we get into all of the benefits of large language models and of the other kinds of ways that medicine is going to be able to lower their cost, using the doctor on the telephone as opposed to going in. They're talking about right now that you can read the actual x-rays using a machine now. You get a better result from reading x-rays by machine than you can from humans. Doctors' diagnoses better by ChatGPT than actual doctors. You're going to see healthcare dropping a lot. Alcohol and tobacco, household and daily items has also dropped from 8.5 all the way down now to 6%, jumped up a little bit, a little over 6%, but that's still way lower than it was. Now, alcohol and tobacco going up. It was higher, but it's going up recently. It's running around 6%, but it's a very small percentage of the total. Clothing, which is around 4%, that has bounced back up from some lows because the inventory situation, Target, Kmart, all the rest were Target, Walmart, all the rest had huge inventory over Christmas. They had to get rid of, but now that's apparently flushed through, but it's still only going up 4%. Communications is going up radically, but that is only to 2.5. So you got to always make sure to look at the baseline. The baseline was going down. So recently it's gotten back up, but it would certainly be well within what the Fed wants at 2%. Education was all the way down to 2.4, but with everything back in business, that is now back to increasing by 3.37. Again, a very small percentage of the overall total, but not that far out of what the Fed would be happy with. Recreation and culture, I expect this category to continue up, quite frankly, maybe not more than 5% a year. But that's where everybody's going to be going. You may have seen my video from Sunday night where I talked about the future is going to be all about recreation, experience, about travel, about sports and games. That's the future. That's, if you want to tell your kids what they should go to school to learn, it's going to be about this category, and it's going to be a much larger category in the future. So, and then you have others, and others is a very small category, and it's now back up to around 6%. But again, it's 1 or 2% of the total. All right, so that's how you use this Trueflation site. Highly recommend that you bookmark it or however you keep track of things. I now look at it every time there's a CPI or a PPI, sometimes every Wednesday or Sunday when I'm doing the financial reporting. But I hope this was useful to you. If it was, please hit like, and I'll look for more opportunities maybe to discuss ways of understanding the financial picture better. And maybe there'll be some other little tutorials like this in the future if you liked it, but you'd have to hit like to let me know that, or let me know in the comments. Yes, Randy, please, more like this. And then hit subscribe and notify. And again, if you want to help out the channel, one way you can do that is by buying copies of the Elon Musk mission. That supports the channel. And also the other way would be Patreon, of course. All right, so it's been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.